The date is January 10th, 2026. And while the Western world is distracted by political theater, a massive financial earthquake has just occurred in Beijing. The People's Bank of China has officially updated its foreign reserve data, confirming a number that fundamentally changes the course of global history. For the 14th consecutive month, China has aggressively increased its gold holdings, bringing the official total value to a staggering $310 billion. This is not just a standard portfolio adjustment by a central bank. This is a declaration of total financial war against the United States dollar. The mainstream media will attempt to tell you this is simple diversification, a prudent move by a central bank to balance its books against inflation. But we're going to show you the forensic evidence that proves this is a calculated, strategic preparation for a post-dollar world order. We are witnessing the most significant shift in global monetary policy since President Nixon closed the gold window in 1971. The Chinese Communist Party is systematically dismantling its reliance on the Western financial system, brick by gold brick, month by month. They are building a sanction-proof economy that can survive total isolation from the SWIFT banking network during a potential military conflict. But before we expose the terrifying implications for the US Treasury market, make sure you subscribe to Finance Mind right now. We track the capital flows that the establishment wants to keep hidden, giving you the critical edge you need in a volatile world. The $310 billion figure is just the tip of the iceberg, the number they are willing to admit to the IMF. Intelligence estimates suggest the true figure, including off-book purchases by state agencies, is likely double that official amount reported. China is moving money through sovereign wealth funds and state-owned miners to hide the true scale of their accumulation from Western observers. They are draining the vaults of London and Zurich, demanding physical delivery of every single ounce they purchase, leaving nothing behind. This distinction is critical. They are not buying paper gold or ETFs. They are taking possession of the physical metal in their own vaults. They know that in a systemic crisis, paper claims on gold will be worthless, settled in devalued currency rather than metal. By demanding physical delivery, they are effectively conducting a slow-motion bank run on the Western bullion banks that rely on fractional reserves. This is why we have seen the gold price disconnect from real interest rates for the first time in modern financial history. Normally, when U.S. interest rates are high, gold prices fall because it costs money to hold non-yielding assets like bullion. But in 2026, rates are high, and gold is still smashing all-time highs, defying every economic textbook ever written by Western economists. The reason is simple. The buyer is not a speculator looking for profit. The buyer is a superpower looking for national survival. China is selling US Treasury bonds to fund these gold purchases, creating a vicious liquidity cycle for the American economy. For 20 years, China recycled its trade surplus back into US debt, keeping American interest rates artificially low for consumers. That recycling loop is now broken, dead, and buried under a mountain of gold bars in the Shanghai Gold Exchange. They are liquidating their portfolio of US debt at a pace that suggests they expect a total collapse in the bond market's value. We are seeing the 10-year Treasury yield spike, not because of the Fed, but because Beijing has stopped buying our debt. When the largest foreign creditor decides to exit the market, there is no one left to absorb the massive supply of new debt. This forces the Federal Reserve to be the buyer of last resort, printing money to monetize the government's reckless spending. That money printing is the inflation you feel at the grocery store, and it is directly linked to Beijing's strategic decision. But why now? Why has the accumulation accelerated so dramatically in the last 14 months specifically? The answer lies in the geopolitical lessons learned from the freezing of Russian assets in 2022. China watched closely as the US and Europe seized $300 billion of Russian central bank reserves overnight. They realized that any assets held in dollars, euros, or yen are not truly theirs. They are merely rented from the West. At any moment, a political dispute over Taiwan or the South China Sea could lead to a total freeze of Chinese assets. Beijing knows that a confrontation is inevitable, and they are ensuring their war chest is seizure-proof before the conflict begins. You cannot sanction physical gold sitting in a vault in Shanghai. It is the ultimate sovereign asset that respects no borders. This move to $310 billion is the financial equivalent of mobilizing the Navy for war. It signals that they believe the window for peaceful coexistence with the US dollar system has permanently closed. We are moving from a world of cooperation to a world of containment, and money is the primary weapon in this new Cold War. The implications for the average American saver are profound and terrifyingly underreported by the corporate financial press. The value of the dollar in your pocket depends entirely on its status as the global reserve currency. If China, the world's factory, stops accepting dollars and starts demanding gold or Yuan, the game is over for the dollar. We are already seeing this shift in the bilateral trade agreements being signed across the global south and BRICS nations. Brazil, Saudi Arabia, and Russia are all settling trade in local currencies, bypassing the dollar entirely for the first time. But gold is the anchor that gives these local currencies credibility and stability in the eyes of the global market. China is effectively recreating the gold standard, but only for its allies and trading partners excluding the West. They are building a gold curtain that divides the global economy into two distinct spheres of influence. On one side is the debt-based fiat system of the West, struggling with inflation, deficits, and insolvency. On the other side is the resource-based hard money system of the East, backed by physical assets and industrial capacity. The $310 billion is the collateral for a new currency called the unit. This proposed BRICS currency, backed 40% by gold, is designed to kill the petrodollar permanently and replace it. If Saudi Arabia can sell oil for a currency backed by gold, why would they ever accept depreciating paper dollars again? This is the nightmare scenario for the US State Department, and it is happening in real time right in front of us. The demand for US Treasuries is collapsing exactly when the US government needs to borrow the most in its history. Washington is running $2 trillion deficits, assuming the world will always lend them money at low rates. China has looked at the US balance sheet and decided that the American government is a subprime borrower. They are dumping the debt before the rest of the world realizes the emperor has no clothes and is bankrupt. This selling pressure creates a ceiling on U.S. bonds, forcing yields higher and crashing the housing market in the U.S. So when you see mortgage rates hit 8%, remember that it is happening because of strategic decisions made in Beijing. The interconnectedness of the global financial system means you cannot isolate the American economy from this massive shock. We are importing the consequences of our lost financial leverage directly into our living rooms and retirement accounts. But the most dangerous aspect of this gold accumulation is the signal it sends to other central banks around the world. Central banks operate like a herd. When the alpha moves, the rest follow immediately to avoid being left behind. We are seeing Poland, Turkey, and Singapore aggressively adding to their gold reserves this quarter, following China's lead. They are looking at China's bet and deciding that they need to hedge their exposure to the dollar as well. This creates a self-fulfilling prophecy, where the fear of dollar collapse causes the dollar collapse to accelerate. The network effect that sustained the dollar for 50 years is now working in reverse, destroying its value. As more nations exit the dollar, the utility of the network falls, accelerating the exodus of capital. China is orchestrating this controlled demolition with patience and strategic precision, waiting for the perfect moment. They are not dumping everything at once, which would trigger a panic they are not yet ready for militarily. Instead, they are executing a silent run, selling just enough to buy gold without crashing the market instantly. But the cumulative effect of 14 months of selling is now undeniable in the data we are analyzing. The liquidity in the US Treasury market has dried up, creating dangerous volatility spikes that scare investors. We are seeing air pockets in the bond market where there are simply no buyers for American debt at any price. This fragility is the direct result of the withdrawal of the Chinese bid that supported the market for decades. Wall Street is terrified because they know their models are built on the assumption of infinite liquidity that no longer exists. If the Treasury market breaks, the entire derivatives complex, valued in the quadrillions, comes down with it instantly. China knows this vulnerability and is holding it over Washington's head like a sword of Damocles. They can crash the US system at any moment by accelerating their selling program and dumping the rest. This gives them massive leverage in trade negotiations and geopolitical disputes, forcing the US to back down. The $310 billion is not just an investment, it is a weapon of mass financial destruction. It neutralizes the threat of US sanctions because China no longer needs access to US banks to survive global trade. They have built their own payment rails, CEPs, which acts as an alternative to SWIFT for the Eastern Bloc. And now they have the gold reserves to back the liquidity of that system during a major crisis. We are witnessing the construction of a parallel financial universe that excludes the United States and its allies. The psychological impact of this cannot be overstated for the global investor class who watches these flows. For a century, the US was the safe haven. Now, capital is confused and frightened by the instability. Smart money is tracking the gold flows and realizing that the center of gravity is shifting east rapidly. We are seeing family offices in Europe and Asia reallocating capital away from US equities and bonds. They are moving into commodities, land and gold, mirroring the strategy of the People's Bank of China to survive. The great rotation out of paper assets and into hard assets has officially begun for the smart money, and the trigger was that 14-month signal from the vaults in Beijing that we just uncovered. The lie that gold is a barbarous relic has been exposed by the actions of the world's second-largest economy. They value gold more than they value the full faith and credit of the United States government today. That vote of no confidence is the most damning indictment of U.S. fiscal policy in the history of the Republic. It proves that the world knows the US debt trajectory is mathematically unsustainable and destined to fail. China is simply the first to head for the exits before the building collapses on top of everyone. But the exit door is small, and the crowd trying to leave is massive and panicked. This rush for safety is what is driving gold to $3,000, $4,000, and soon $5,000 an ounce. It is not a bubble. It is a repricing of the currency against the only true money that exists in the world. The $310 billion signal is a warning siren that is blaring across the global markets if you listen closely. Most people are ignoring it, trusting the TV pundits who say everything is fine and the economy is strong. But you are watching this video because you sense that something is fundamentally wrong with the system. You are right. The tectonic plates of finance are shifting under our feet, and the quake is coming. The era of the dollar is ending, and the era of gold is returning with a vengeance in 2026. China has made its move, placing a massive bet against the survival of the American empire. Now, the question is not what China will do next, but how the US will respond to this threat. Will they try to confiscate gold? Will they launch a digital currency? Or will they go to war to save the dollar? The chess pieces are moving, and the endgame is rapidly approaching for the global financial system. We are just at the beginning of the most volatile period in financial history, and you need to be prepared. The immediate consequence of China's gold strategy is the silent but devastating detonation of the American bond market stability. For decades, the United States enjoyed an exorbitant privilege, borrowing trillions without consequence because the world bought our debt endlessly. But as Beijing exits the market, that privilege is evaporating, leaving the US Treasury naked and exposed to market forces. We are entering a phase known as fiscal dominance, where the Federal Reserve loses control of monetary policy to government spending. The Fed wants to fight inflation, but they cannot raise rates any higher because it would bankrupt the US Treasury instantly. Every 1% increase in interest rates adds $300 billion to the annual deficit, a cost we cannot afford. China has done the math and realized that the US is mathematically trapped in a debt spiral with no possible exit. They are using their treasury sales to pin the Fed in a corner, forcing them to choose between the dollar and bonds. If the Fed saves the bond market by printing money to buy the debt China is selling, they destroy the dollar. If they try to save the dollar by keeping rates high, they crash the banking system and the commercial real estate market. This creates a doom loop where every solution only accelerates the underlying crisis, making the eventual collapse even more painful. We are already seeing the cracks form in the repo market, the plumbing of the financial system where banks lend cash. Liquidity is drying up because no one wants to accept US Treasuries as high-quality collateral anymore due to volatility risk. Banks are hoarding cash, terrified that the value of their bond portfolios is about to take another massive, fatal hit. This is exactly what caused the collapse of Silicon Valley Bank, but now it is happening to the entire banking system. The unrealized losses on bank balance sheets have ballooned to over $700 billion, a hole too big to fill. These are losses that the banks are hiding, hoping they never have to sell the bonds and realize the hit publicly. But China's selling pressure is driving prices down, making those holes in the balance sheets deeper and more dangerous every day. If depositors realize their bank is insolvent and try to withdraw their money, the system collapses instantly under the pressure. The FDIC does not have enough money to bail out the system. They have less than 1% of insured deposits. This is why the government is terrified of the viral bank run, fueled by social media and instant payment technologies. They know that once the confidence is broken, the speed of the collapse will be faster than regulators can react. China understands this fragility better than anyone because they have studied the structural weaknesses of Western finance for 20 years. They are targeting the soft underbelly of the American empire, its reliance on cheap debt to fund its lavish lifestyle. By forcing rates higher, they are crushing the American middle class without firing a single shot or launching a missile. The housing market is frozen because nobody can afford an 8% mortgage on a $500,000 starter home anymore. Auto loans are defaulting at the highest rate in 30 years because monthly payments have doubled due to interest rates. Credit card debt has hit an all-time high of $1.1 trillion as families borrow just to buy food. This is the silent depression that the media ignores while they talk about the stock market hitting new nominal highs. The stock market is rising only in nominal terms, fueled by the devaluation of the currency, not by real economic growth. It is the Zimbabwe effect. The numbers go up, but your purchasing power goes down drastically with every passing month. We are witnessing the hollowing out of the American economy, driven by the weaponization of interest rates by foreign powers. And the trigger for this pain is the decision made in Beijing to stop funding our deficit and buy gold instead. But the Chinese strategy goes beyond just breaking the bond market. They are building a technological cage for the US dollar. They are rolling out the mBridge project, a digital currency platform that connects central banks directly. bypassing the US dollar. This system allows Thailand, the UAE, China, and Hong Kong to trade instantly without touching the US banking system at all. It is a swift killer that uses blockchain technology to make the dollar obsolete in international trade settlement and finance. Why would a Thai exporter wait 3 days and pay high fees to use SWIFT when they can use mBridge instantly? This technological obsolescence is the silent killer of the dollar's dominance in global commerce, reducing demand for the currency globally. As more nations join mBridge, the demand for dollars creates a vacuum that sucks value out of the US economy rapidly. The US government sees this threat and is reacting with the only tool they have left: financial repression and control. They are preparing to implement yield curve control, where the Fed caps interest rates by printing infinite amounts of money. This is the nuclear option that signals the end of the free market and the beginning of a command economy. It allows the government to borrow cheaply, but it guarantees double-digit inflation for the next decade for every American citizen. You will see the price of bread, gas, and rent skyrocket as the dollar is sacrificed to save the bond market. This is the inflationary depression scenario that destroys the middle class while protecting the nominal assets of the financial elite. The rich own assets that rise with inflation. The poor and middle class own cash that loses value every day. This wealth transfer is not an accident. It is the deliberate policy response to the crisis China has strategically triggered. We're also seeing the implementation of capital controls under the guise of national security to trap money inside. The government is making it harder to move money out of the country or buy foreign assets to escape inflation. They want to trap your capital inside the US banking system to be the fuel for their massive debt machine. This is why they are attacking crypto and stablecoins so aggressively. They hate the competition from decentralized sound money alternatives. Bitcoin and gold represent exit doors from the burning building, and they are trying to lock them before you leave. The Operation Choke Point 2.0 is cutting off crypto companies from the banking system to stifle adoption and innovation. But China is playing a different game. They are accumulating gold to back their currency, not fighting the concept of money. They understand that in a world of fiat debasement, the currency with the most gold wins the trust of the world. The gold hedge is their way of saying, we don't trust the paper, we trust the metal, and it works. And the rest of the global south is listening, watching, and following their lead rapidly into the new BRICS system. We are seeing a geopolitical realignment where the BRICS nations control the commodities, and the G7 nations control the debt. The West has the financial engineers. The East has the actual engineers and the raw materials needed for industry. In a conflict, you cannot eat derivatives, and you cannot fuel a tank with credit default swaps or paper contracts. The physical economy is reasserting its dominance over the financial economy, and the West is woefully unprepared for this shift. We have financialized everything, stripping our industrial base to boost quarterly earnings per share for Wall Street shareholders. China played the long game, building the factories and mines while we built the casinos and the betting parlors. Now the casino is running out of chips, and the factory owner is calling in the loans we cannot pay. The US military is waking up to the realization that they rely on China for the supply chain of weapons. We cannot build a fighter jet without rare earth minerals that are refined almost exclusively in China by state companies. This strategic vulnerability paralyzes the US response to Chinese aggression in the Pacific, leaving Taiwan exposed and vulnerable. If we sanction China, they cut off the minerals and the US military machine grinds to a halt within months. It is a checkmate position that has been decades in the making, funded by our own consumption of cheap goods. We bought their cheap goods, and they used the money to buy the rope to hang our economy with debt. The irony is tragic. The American consumer funded the rise of the very power that is now dethroning the dollar. But the most immediate danger is the potential for a false flag cyber attack on the financial system to hide the collapse. The World Economic Forum has been warning about a cyber polygon event that wipes out bank records and creates chaos. Such an event would provide the perfect cover for the reset of the financial system and the erasure of debt. They could blame foreign hackers for the deletion of debts and the collapse of the currency to avoid blame. It would justify the immediate rollout of the central bank digital currency to restore order and track every single transaction. We must be vigilant and question any narrative that conveniently solves the government's debt problem through a massive crisis event. The transition to CBDCs is the ultimate goal of the financial elite to maintain control over a collapsing system. They know the current system is dying, and they want to control the demolition and the reconstruction that follows. China has already rolled out its digital Yuan, giving them total surveillance over their population's spending and social behavior. The US is rushing to catch up, drafting the legislation for a digital dollar behind closed doors in Washington, D.C. They will sell it to you as convenience and safety, but it is actually a digital prison cell for your money. With a CBDC, they can turn off your ability to buy gas if you have exceeded your monthly carbon limit. They can enforce negative interest rates, taking money directly out of your account to force you to spend it immediately. This is the Great Reset mechanism, the end of financial privacy and the end of financial freedom for the individual. The crisis triggered by China's gold buying is the pretext they need to force this change on the American public. They follow the maxim: never let a good crisis go to waste, utilizing fear to implement unpopular and dangerous policies. You are being herded into a new system that is designed to strip you of your sovereignty and your wealth. But there is a resistance forming, a counter-economy of people who refuse to comply with the new digital tyranny. People are using cash, gold, silver, and barter to conduct trade outside the surveillance grid and preserve their privacy. Parallel economies are springing up, built on trust and physical assets rather than debt and government promises. This is where the hope lies, in the resilience of individuals to create their own systems of value and exchange. The government can print money, but they cannot print trust, and they cannot print labor or real value. Real value comes from productive people working together, not from central bank computers or government decrees. The collapse of the dollar system is inevitable, but the rise of the surveillance state is not if we act. We have a choice in how we respond to the crisis that is unfolding before us right now. We can accept the digital yoke, or we can build a decentralized future based on sound money principles. The actions you take in 2026 will determine which side of the fence you end up on forever. The volatility we are seeing now is just the tremors before the main earthquake hits the global financial system. China has pulled the pin on the grenade, but the explosion hasn't fully happened yet in the public eye. We are in the suspended animation phase, where the coyote has run off the cliff but hasn't looked down yet. When the realization hits, the panic will be absolute and total, wiping out those who are not prepared. You must use this time to position yourself before the herd stampedes for the exits and locks the doors. The window is closing and the storm clouds are gathering darker than ever before on the economic horizon. This is not fear-mongering. This is reading the balance sheet of the world and accepting the mathematical reality. The liabilities exceed the assets, and the creditors are calling in the loans that we cannot pay back. The bankruptcy of the old order is here, and the new world is being born in chaos. The primary mechanism for navigating this new, chaotic world is understanding the silent war on property rights that is currently underway. The American dream of homeownership is not dying by accident. It is being targeted for execution by the financial elite. We are seeing a coordinated effort to convert the United States from a nation of owners into a nation of permanent renters. Institutional investors like BlackRock and Vanguard are raising billions of dollars specifically to buy single-family neighborhoods across the Sunbelt states. They are outbidding families with all-cash offers, driving prices up to levels that no median income can afford without extreme leverage. This is not a free market operating efficiently. It is a market being cornered by entities with access to infinite cheap credit. The goal is to capture the monthly cash flow of the American household and funnel it directly into Wall Street coffers. When you rent your home from a hedge fund, you're no longer building intergenerational wealth for your children to inherit. You're simply paying a subscription fee to exist in your own country with no equity to show for it. This aligns perfectly with the World Economic Forum's infamous prediction that you will own nothing and be happy by 2030. But the happiness part is optional. The owning nothing part is rapidly becoming a mandatory economic reality for the working class. We must also look at the legal framework being put in place to seize assets during the next systemic crisis. Recent changes to the Uniform Commercial Code have altered the legal status of securities held in brokerage accounts and pension funds. Most investors believe they own the stocks and bonds in their 401k, but legally they only own a security entitlement. This means you are an unsecured creditor to your broker, and the broker is the legal owner of the shares. In a systemic collapse, these assets can be used as collateral to save the clearinghouses, leaving you with absolutely nothing. This concept, known as the Great Taking, is the hidden trapdoor underneath the entire Western retirement system. It explains why the derivative exposure of the major banks is being allowed to grow to quadrillions of dollars without regulation. They know that when the derivative bubble bursts, they have the legal right to recapitalize using your assets as bail-ins. This is why we emphasize removing your wealth from the system and holding it in your own physical possession. If you cannot hold it in your hand, you do not own it. You merely have a claim that can be revoked. The year 2026 will be defined by the realization that counterparty risk is the only risk that truly matters anymore. We are also watching the collapse of the European industrial model, which is the canary in the coal mine for the US. Germany, once the powerhouse of Europe, is deindustrializing at a terrifying pace due to high energy costs and regulation. Chemical plants, steel mills, and auto factories are closing down or moving to China and the United States for survival. This destruction of European industry removes a key pillar of support for the global financial system and banking liquidity. When Europe falls into a deep depression later this year, it will drag the US banking system down with it instantly. US banks are heavily exposed to European sovereign debt and the derivatives tied to the euro currency's stability. The contagion will cross the Atlantic in milliseconds, bypassing any regulatory firewalls that claim to exist between the markets. We are dealing with a globally synchronized downturn where there is no engine of growth left to pull us out. China cannot save us this time because they are dealing with their own demographic collapse and property market implosion. They are sitting on millions of empty apartments and a population that is shrinking by millions every single year. The Chinese Communist Party is preparing for internal unrest, not for bailing out the Western consumer with cheap credit. This isolationism means that every nation is fending for itself, leading to resource wars and massive trade barriers. We're returning to a 1930s-style geopolitical environment, but with nuclear weapons and algorithmic trading driving the conflict speed. The danger of a hot war breaking out as a distraction from the economic collapse is higher than ever before. History shows that when governments go broke, they often go to war to reset the ledger and unite the populace. The military-industrial complex is the one sector of the economy that is recession-proof and growing despite the downturn. Defense stocks are hitting all-time highs while the rest of the market struggles, a grim signal of what is coming. But for the average citizen, the war is being fought at the supermarket and the gas station every day. The destruction of the currency is a form of warfare against the working class, stealing their time and their labor. To survive this, you must adopt a wartime mindset regarding your personal finances and your career trajectory immediately. You cannot afford to be passive. You must aggressively cut costs and build alternative income streams to survive inflation. The days of relying on a single corporate paycheck are over because that paycheck is vulnerable to the coming purge. We advise building a sovereign stack of assets that are outside the banking system and resistant to inflation theft. Physical gold and silver are the bedrock of this strategy, serving as insurance against currency failure and bank bail-ins. They have preserved purchasing power for 5,000 years and will outlast the Federal Reserve and the US dollar. Bitcoin, if held in self-custody, offers a digital escape hatch from the surveillance of the CBDC control grid. It allows you to transport wealth across borders without permission, a crucial capability in a capital control scenario. Productive land is the ultimate asset, providing food, water, and shelter independent of the fragile global supply chain. Even a small garden reduces your dependency on the corporate food system and buffers against the coming food inflation. Community is the final piece of the puzzle. You cannot survive the Great Reset as a lone wolf. You need a network of like-minded individuals who can trade skills, resources, and security when the system fails. This is why we are building this channel, to connect the people who see the truth and want to prepare. The government wants you isolated and afraid, because that makes you easier to control and manipulate through the media. By coming together and sharing information, we break the monopoly on truth that the establishment tries to enforce. We are seeing a massive awakening as people realize that the conspiracy theories were actually spoilers for reality. The things we were warned about, digital IDs, vaccine passports, CBDCs, are all being implemented openly now without shame. They are no longer hiding the agenda. They are rushing to complete it before the system collapses entirely on itself. The speed of the changes in 2026 will be disorienting for those who are still asleep at the wheel. Laws will change overnight, currencies will be revalued over the weekend, and borders will close without any warning. You must be agile and ready to adapt your strategy as the situation on the ground evolves rapidly. Do not be married to normalcy bias, the belief that things will return to how they were in 2019. That world is gone, and it is never coming back. We are moving forward into a new, harsher epoch. The transition will be messy, but humanity has survived the fall of empires before and emerged stronger on the other side. The key is to position yourself on the right side of the wealth transfer that is currently happening globally. Wealth is never destroyed. It is merely transferred from the unprepared masses to the prepared minority who act. In 2008, the banks were bailed out, and the people were sold out to pay for the corruption. In 2026, the currency itself is being bailed out, and the middle class is being wiped out by inflation. This time, you have the information in advance, and you have the power to act before the doors close. Do not let the fear paralyze you. Let it motivate you to take decisive, massive action today. Audit your expenses, sell liabilities, buy assets, and secure your physical and digital perimeter against the threats. The window of opportunity to position yourself is closing rapidly as the crisis accelerates into a full panic. Once the capital controls are in place, it will be too late to move your money into safety. We have guided you through the data, the history, and the likely trajectory of this massive financial hurricane. The numbers are irrefutable. 1.8 trillion in real estate debt, 38 trillion in national debt. These are not opinions. These are the mathematical certainties that dictate our future and the death of the dollar. The Great Reset 2.0 is the inevitable conclusion of a debt-based system that has reached its mathematical limit. It is the end of the illusion and the beginning of the hard reality we must face together. But remember, chaos is a ladder for those who keep their heads when everyone else is losing theirs. You have the knowledge, you have the tools, and now you must have the courage to execute the plan. Do not wait for the government to save you. They are the ones who caused this disaster in the first place. You are your own central bank, your own risk manager, and your own savior in this new world. Take responsibility for your financial future, and do not apologize for protecting your family from the coming storm. The storm is here, but we will weather it by staying informed and staying prepared for every outcome. This is the most important financial battle of our lives, and we intend to win it decisively. Stay liquid, stay alert, and never stop questioning the official narrative that is fed to you. If you found value in this deep dive, please hit the like button to help spread this message. Subscribe to Finance Mind and turn on the notification bell so you never miss a critical update. Share this video with everyone you care about. They need to wake up before it is too late. We will continue to be your lighthouse in this economic storm, bringing you the truth every single week. Thank you for watching, and we will see you on the other side of the crisis.